We continue to see the downward pressure on oil prices. First, we had the May futures going into negative territory for the first time ever. June futures also under pressure now. What does this mean for oil ETFs? Can they actually trade below zero? And what will be the ripple effects here?
Yeah, so it's unprecedented times on so many levels here. So if we look at the WTI contract for May, it moved into positive territory today, basically just a day after it fell below zero yesterday. And, you know, today's the last day of trading for that contract. So I think that that's fueled some of the wild price swings. And, you know, the June contract is more actively traded and therefore looks like a better indication of where traders believe oil is headed, which is, you know, pretty much it was 66% or so lower after closing above the $20 mark on Monday. So there's this unprecedented demand loss from the coronavirus pandemic, and storage is quickly filling up, meaning that, you know, pretty soon there'll be nowhere to store crude. And what it means really is that because producers are running out of storage space as the demand for energy collapses, they're willing to pay buyers to take crude off of their hands, which is, you know, imagine if you were delivered crude, right? So what happened to USO? So USO is the most popular ETF in the space. It gives exposure to the crude oil futures. It fell about 20% today. It was halted pretty much before the opening bell, and then, you know, went on to suspend creations in the ETF as oil was just absolutely beaten down because of this oversupply and lack of storage. So, you know, they have, I think, about a quarter of their exposure to the June contract for WTI, and a lot of people bought this. Investors, all sorts of investors, thinking that it hit an absolute bottom. You know, how can it go below this point? And I think, you know, all of this pretty much just led to the ETF being down, you know, historic levels. So year to date, it's down about 75% or so at the close today, and on today, the June contract was down about 30% to $14.89 a barrel.
Right.
So, you know, what they're doing is pretty much allocating to different futures just to keep the ETF open to prevent it from going to zero, which, you know, I'm sort of very familiar with in the world of ETFs. The coronavirus in the last 2 months has made it very, very hard for issuers to manage our exposures.
Exactly. So given this uncertainty, whether it's coronavirus or the oil crash, or before that we had trade uncertainty, how important is it for these companies, once earnings season, in the middle of earnings season, that analysts focus on resilience, on what you do when all of these unexpected things happen?
So I think in terms of earnings season, you know, well, specifically for oil, I think the biggest issue here is that until people start driving to work again and flying and taking vacations and, you know, filling up cruise ships and airplanes, it looks like a good value, but there's just way too much volatility and stability to really get in. If you look at other names, though, you know, we saw some positive news out of Netflix today. I do think that right now there is a lot of short term in terms of thinking about earnings. You know, the companies and the names that have strong balance sheets and flexibility will probably continue to surprise us early on and continue to hang tight. You know, believe it or not, consumer discretionary is doing really well because if you look at, in terms of the ETF world anyway, if you look at the top name in that index after the index reshuffle, Amazon is number one. Everybody is ordering from Amazon right now. Every, you know, household staple, grocery, toilet paper. I mean, Amazon is just growing and growing, hiring, and, you know, so you are going to have these stories of good earnings. But I think overall, a lot of it will be around strong balance sheets and who can be resilient in terms of this volatility.